Right, so my sessions are wrapped up today. Price action is completely just ripped all the way down like a falling knife, which makes a lot of sense. And it was part of today's plan and bias that price action will do this. But I missed an entry opportunity, which I'd actually want to go over. And that's the only thing that I would like to go over in today's trading observations, in today's trading session. What made me miss this trading opportunity? Right, so the lines that we had marked out on the screen as we came up to the 4-hour candle closure, which for us is the 2 p.m. For New York time, it's the 9 a.m. candle, half hour before NYSE with the bell. We had this, and all of my narratives across that 4-point checklist that we introduced last week and continuing to optimize, we've built all of it. We've identified the current range that we would like to trade. So we've identified the range that we were trading in. We were identifying what price action was doing to the left of my screen and essentially trying to mirror what price action was going to do. So we already made the analysis very, very nicely. And price action actually followed exactly what I wanted. Where I went wrong was only looking at the 1 hour and 4 hour, being very stubborn on getting a time frame retest towards the top wick. From my personal experience, what I've typically seen is if price action pulls back to respect the range above, so in this case, above 44.20, price actions come down for a bottom wick first, breaking the lows. This typically means price actions going to continue the range up because you're re-breaking lows. You are more likely to come up if you don't have a top wick first, you're more likely going to retest. Same thing was on the hour. I was expecting the retest, but what I didn't put too much consideration into was the fact that this is a fake out. In my live session, I knew that this is a fake out, but in my mind, I still wanted to see a range being printed. The reason why I wanted a range being printed is because to the left of my screen, what I typically see mirror and price is you'll get some form of range retest validated before price action comes down. And actually what's fun about this trade, what's interesting about this trade is that you would have actually got the range 2. I was expecting the range 2 in the trade session. Price action printed the fake out, but I was so stubborn on trying to get that retest back towards 420 before price gives me that retest here. I didn't take the trade. So I suppose the observation I'm trying to make today is actually I have to utilize more intuition rather than just looking at step 4 and saying, no, I must have a 5 time frame confluence all the way through to the 4 hour before I can enter the trade position. That's absolutely not true. Actually, building narrative means that even if the 1 hour and 4 hour does not necessarily have a top wick on the open right here, price action is still validated to push down. It's just that I need to build the time frame narrative across all of the other time frames. Well, what does the 5 minute tell me? It tells me that you've closed with barely a top wick, indicating no further range to the upside. You've closed your first 5 minute candle closure at the 2 p.m., giving you a candle closure below this range, the current range that you're interested in trading full TP2. And I should already use intuition through prior experience in the markets to know that, okay, if it says a fake out, then you don't necessarily need price to come back up. You've increased the probability that price action will continue the move down without necessarily requiring the retest towards the top wick. That's my observation. It's a classic textbooks play. Price action printed what we wanted in terms of mirroring price action. You've given me a retest, which is also my range 2 breakout and retest model that I really love trading. And that simply means you've traded and identified the range above. You've identified the range below using prior historical data. Price action has given you the lows, which has been created. So this is my advantage point. Price action pushes back up, revalidates the area that you're initially looking to take in entries. You'll be looking at a wick entry right here. Price action then validates you to come in. Price action goes break even, risk free off of the table when price action hits your advantage point. And then price action comes all the way down towards your full take profit. And this would have been an absolutely amazing trade. Yes, my risk reward I'm still working on. We're currently at a 1.56 on this trade. Preferably, I'd like a minimum 1 to 2. However, for me right now, I'm trying to prioritize the consistency of vetting quality positions as opposed to looking at a fixed entry requirement model of a 1 to 2 risk reward. And actually it's funny because the reason why I don't have a 1 to 2 is simply because I used to manipulate it and prioritized a risk reward ratio over the actual logical price action, and I just changed my take profit to a 1 to 2 just to meet that requirement. Therefore, I've now taken that away and I'm just focusing on this 4-point checklist and looking to develop it further. The observation from Monday's trading session is very straightforward. It's actually something that I think I can bounce back from very easily and push into building into my skill set. Been a solid session, showed up for the whole thing. We had a London breakdown. I had an hour session this morning. New York session went really well. This was the only trading opportunity that was of high quality. That when using my 4-point checklist today, this was the only setup that made a lot of sense. That's it, and we're coming back for tomorrow's session.